Hello, my name is Brian Shannon, and I run a website called alphatrends.net. And what I'm going to do is take you through what's going to be called the trade of the week here. Not necessarily the best trade that I did during the week. In fact, a lot of times what I think I'll do for educational purposes is to actually show you some trades that didn't end up working out the way I anticipated. The trade that we're going to look at is one I had done just about a half hour ago in the shares of Broadcom, some BRCM. Let's take a look first at the SPY. The spiders, the S&P 500, has been and remains in a bad downtrend here over the last week and a half. You can see that we're getting a bounce in here today, but the path of least resistance, as defined by the lower highs and lower lows, is clearly still intact. We've got a declining 200-day moving average, which indicates the longer-term trend is lower, and we've got this 50-day moving average that's heading lower as well on the SPY. So when we see that, you want to look at these rallies as something that is likely to fail as the longer-term downtrend exerts itself. However, there are going to be bounces along the way in a downtrend, and it's not my job to try and pick tops and bottoms. What I'm more interested in is taking a little bit of money in between. So I was attracted to the shares of Broadcom, symbol BRCM again, because it's right now, you can't really tell, maybe if we change the scaling in here, it's kind of fighting with this 200-day moving average in here. It's a black moving average that you can barely see, that it's holding above a little bit. We've also got an advancing 50-day moving average, and generally speaking, you want to trade in the direction of the 50-day moving average on the daily time frame. When the 50-day moving average is advancing, consider the stock innocent till proven guilty, whereas in a downtrend, that is when the 50-day moving average is declining, guilty till proven innocent. So it's not necessarily where is the stock or the market in relation to it, but what's the direction that's more important. You see those three bars that I just pointed out were actually when the market was below the 50-day moving average, but the direction of the 50-day moving average was higher. So we're looking at the daily time frame. What I want to do next is take a look at the 30-minute time frame. Here we see that each candle represents 30 minutes worth of data. Now on the 30-minute time frame, I have this orange moving average, which represents the average price of the last 5 days. And generally one of my rules is to trade in the direction of the 5-day moving average for shorter term trades. So we've got a daily uptrend as defined by the 50-day moving average, and we've got a 5-day average that's heading higher as well. So as the market started to turn a little bit here, what we're going to do now is shrink down a shorter term time frame, and that is we'll look at the 5-minute time frame. On the 5-minute time frame here, you can see that the stock has had a little bit of resistance recently, right about $27.18. Well, it looked to me, and now I'm going to switch down to a shorter term time frame. We'll go right down to the actual 1-minute time frame in here. And these are the trades that I had done in this stock today. So I had purchased first 1,000 shares at $27.12. So I purchased that right about in here as the stock just started to get moving. So as it started to, it was showing us signs that the buyers were getting more aggressive because it was making these higher lows in here, and it was just looking like it was ready to break past that resistance that had been holding it back for the last day and a half or so. So it was starting to get a little bit of momentum. I'm a believer that you want to buy on strength, not on weakness, because you never know if that weakness is going to continue to hurt the stock. So I bought a little bit there, and then I averaged up into the stock as it broke past that level. I bought more of it at $27.20. So you can see at this point I had 2,000 shares at an average price of $27.16. The stock did start to rally, and I had actually entered an order, and this is a little bit deceptive about my order book. It says that I bought 1,000 at 12:10, that is 12:10 p.m., and sold 500 at 12:10 p.m. What I'd actually done was set the order at 12:10 p.m. So that first order to sell 500 shares at 12:28 netted me $60. And the reason I had taken it a little bit off right there was to eliminate the risk. Again, the market is in a downtrend, so I'm generally not very trusting of stocks, even one that looks like it might be bullish, like the Broadcom here. So I'm generally not trusting, and I want to reduce my risk at all points possible. So that first $60 assured me that even if I sell the stock at a break even, once you take commissions out, I would still be able to realize a profit. A couple minutes later, the stock continued to rally, and I sold a little bit more here on this rally at $27.29. and then I sold some more on further strength at 37 cents right up in here, and then I finally sold the last 500 shares at $27.48. So far the stock hasn't pushed beyond that level, but you can see that just in the course of about 45 minutes or so, I had made $390, and the stock position never moved against me once. Now, like I said, I'm not gonna do these trades to show only winning trades. I want there to be some educational value in here, and I want to show you how you can think for yourself. And the concepts that I use, even on a 1-minute time frame, are applicable to any time frame possible. That's the subject of my book, Technical Analysis Using Multiple Time Frames. And that's going to be the way I'd like to approach this each week as I present a trade to you. And if you have questions, feel free to email me at alphatrends@gmail.com. Thanks.